Does this in any way indicate whether the government is now prioritizing consumption over investment? This is a change of stance. What does this 0.5% of GDP of potential tax cuts do to the economic momentum? So I don't think this is a change of stance. This is, as we discussed, and this was necessitated by the end of compensation cess. They had to make some changes. And in the process of making these changes, they have significantly simplified the tax structure. And in the process, if a consumption boost happens, that's a desirable outcome. I don't think the government is against consumption. But it is not that they are now going to work on more schemes to boost consumption and deprioritize infrastructure development. So I would not be reading that from this. At the same time, given that there is a 0.5% of GDP worth of sort of tax cut that has happened for through GST, what it does is it magnifies the impact of the monetary easing that had happened. So in many ways, the reversal of monetary tightness that we saw between FY24 and 25, where credit growth went from 16.3% year on year in March 24 to 9.8% year on year in May 25, and even the fortnight ending August 22 was still 9.9%. So that significant decline in credit growth has been a big drag on the economy. The RBI has eased monetary policy over the last 6 months significantly. But it is like, pressing on the accelerator without engaging the gear, because monetary policy by itself cannot reverse economic momentum. Because what has been happening is that when some of the large banks were told that your loan deposit ratio is too high, and they started, the largest private bank went from 14% credit growth to 3% credit growth. So that itself is 2.5% impact on growth. So that itself created a downward downward momentum. And as the deceleration started, all financial firms found that the income growth they had assumed was no longer true, and they started finding stressed borrowers. And they also then became cautious and started pulling back. This was exacerbated by the monetary tightening that happened in the October-December quarter, where the RBI was forced to sell dollars, but at the same time they did not simultaneously buy bonds and re-inject the liquidity. So it's been about a week since the GST cuts have been effective. There's been a very strong rebound. So once the economic momentum starts to move up, then the monetary easing starts to become a lot more potent. So I think that courtesy this, there are still some uncertainties. Remember that if, say, a car that was selling at 11 lakhs now sells at 10 lakhs, so the 1 lakh rupees saved. Now, will the buyer save that money, or will they spend it on something else? The second part is, if you bring down prices by 8-9% because of the supply demand, or rather the demand curve, will demand for the cars go up? At this stage, it's too early to decide on which way both these decisions are going. But as a forecaster, I think there is a reasonable probability that this is going to suffice in terms of giving the necessary upward momentum, so that what was a vicious cycle becomes a virtuous cycle because of the monetary easing that has happened. So it should help economic momentum and help make monetary policy much more effective. What I also think will happen over the next couple of years is because of the impact of the Laffer curve, because of the impact of better formalization, we should see the tax to GDP in GST also starting to improve. So, but that's a medium-term impact. It's not immediately visible.